Hello and welcome to the DME podcast, brought to you by DME, the podcast booking platform. Whether you're a podcaster or an aspiring guest, the DME app is the perfect platform for you to get booked and manage your podcast bookings. I'm your host, Sukh Hayre, the founder of DME, and on this podcast we'll be discussing the latest news and views in tech, the ins and outs of entrepreneurship, and even dipping our toes into the adrenaline-filled world of mixed martial arts. Today, I'm joined by economist Catherine McBride, someone who's worked at the sharp end of financial markets and more recently right inside UK trade policy. We get into some big questions on this one. What actually happened to the city after Brexit? And why didn't firms leave like everybody predicted? Why do countries trade globally rather than just with their neighbours? And are we quietly deindustrialising the UK through our own energy policies? Catherine also gives an interesting take on Donald Trump's US tariffs, arguing they're less about trade and more about national security, which I think reframes the whole debate. If you're interested in how economics really works beyond the headlines, this is a great conversation. So please enjoy Catherine McBride. Catherine McBride, welcome to the DME podcast.
My pleasure to be here. Thank you for inviting me.
No, well, thank you for accepting and being very generous with your time. Really appreciate it. I kind of came across your profile online, I'm ashamed to say, because I think you've got an illustrious career as an economist. And I think our previous podcast was with Professor John Hearn, who kind of taught me a lot about economics and some dispelled some of my misconceptions. So I think you can probably build upon that in terms of the economic theory and how economics is applied. And some of your writings and thoughts on kind of the world economy at the moment. So for our audience, do you want to just give a quick personal background to yourself? Obviously, I'm hearing an Antipodean accent.
Yes, no, I am an Australian. I grew up in Australia, went to university there. I studied economics in Sydney University. It's a very vocational degree. People are churned out. We know all about monetary economics, microeconomics, accounting. It's very numerate econometrics. And so people are walking straight out of they used to walk straight out of the university and into a bank. And I ended up getting posted to London, where I continued my career over here and started trading Australian derivatives, but ended up trading international ones, and then commodity markets. So I've had a very varied career, and I've come out of that sort of discipline, which is about hard economics, which Professor John Hearn would also recognise. A lot of people who are economists in the UK tend to have studied political economy, so they know a lot more about philosophers and political philosophies and things that were happening in the 1700s and the 1800s, which I'm quite envious of. Sometimes they'll tell me stuff that I'm really fascinated by. But I think when it comes to actually working in the financial service markets, you need the other side of that coin. You really need to know about the numbers. And that was always my specialty. But I've only recently, in the last sort of say 10 years, got involved in policy work, because when you're working in the markets, you just assume that everything in Westminster is happening as it should. And I never had much to do with it. And it's only recently that I've been working in think tanks in Westminster and looking at financial policy, at financial regulation, and at trade economics. Because of my background in commodity trading, and most Australian companies that people in London are interested in were always big mining companies and companies that dealt in commodities. So I feel like you've just got this general knowledge about commodity markets if you grow up in Australia that people in London often don't have. So I've fallen naturally into trade policy almost by accident, because I found myself writing about farming when so much misinformation was being spread about by people who didn't want us to leave the EU primarily. And consequently, the government actually put me on the Trade and Agriculture Commission. And even when I was on that commission, I found that I knew more about trade and economics than most of the people on the commission. There are a few lawyers there who know all about the law of it, but people seem to be unaware that there are, published statistics as to how much people are buying and how much they're exporting, how much they're importing, what they import. I mean, the system of international trade can tell you right down to the size and the packaging of what's coming in and out of the country. It's the HS code system really appeals to my sort of mathematical Excel spreadsheet of a brain, and that is fascinating stuff. And I seem to be the only one on the commission who understood how to read the trade statistics. So it was a very eye-opening experience.
And what period are we talking? Are we talking during the initial Brexit negotiations following the vote to leave from the UK from the EU?
I started working in policy work when Theresa May was as the Prime Minister. So it was after the referendum when a couple of people in the city thought, well, if we can now make up our own financial regulations, which ones do we want to change? And it was a really good question. So we set up a small think tank in the city where we're inviting people from every discipline to come and talk to us about, say, insurance regulation or GDPR or investment regulation, and ask them, which EU rules do you want to change? Which ones do you like? Which ones do you want to keep? And we started putting together papers or writing papers, putting together spreadsheets of what was holding people back and which ones they disliked the most. And in some areas, they just wanted to get rid of the whole law. In other areas, most financial services understand that they need some regulation and that it is much easier to sell their products if people think that they're being regulated. It's if you just rang up someone and said, oh, I've got this great investment, you should buy it. Most people would go, well, who are you? Where if you're ringing up from a bank and you're regulated by the FSA, then you've got a credibility where people will trust you. So they didn't want to get rid of all the regulation, but the EU is very good at putting excessive regulation down. So there was quite a few things that didn't work for London, because London is a very international market, even though it's based here. For many, many years in the 80s and the 90s, New York and Chicago were big markets, but they tended to deal, well, New York especially, they dealt with the American market. And Japan was also a big market, but it dealt with Japan. And London kind of did everyone else. So if you didn't fall into the US or Japan, you were basically trading through London. And it is still the biggest foreign currency market in the world. By doing almost half of all foreign currency transactions come through London. It's quite extraordinary what is happening here. We have a huge investment management industry here, but a lot of the money they're investing is coming from the California teachers' pensions or some other completely unrelated place. So we attract a lot of investment because I think our investment advisors are very good. They're very cautious. They don't rush into things, but they've got a great reputation, which they want to hold on to. So there's a lot of things that happen in London that are looking outward. And things like the International Metal Exchange is in London, even though very few metals are mined in the UK anymore, but the exchange is still here. So there are some things that have traditionally set up in London. The Lloyd's insurance market does incredibly international things, where most, say, European insurance and a lot of the European insurance regulation is kind of based around life insurance, because that was something the Europeans concentrated on, where the UK had to obey their rules, even though they were doing things like catastrophe insurance or, insurance against hurricanes or contract insurance. They did a lot of that sort of work. They do aircraft and tankers, and they insure a whole lot of things that do not have sort of life statistics going back for 300 years. So you're trading with a completely different risk. And they had to obey the same rules as a life insurance company based in Munich, so there are a lot of things that people needed to change. So that's where I started working on it. And it was only after we left and we did some trade agreements that I was put on the Trade Commission.
So I do remember that time during those negotiations, because I think it was a political awakening for a lot of people. I've never voted, but the first thing I ever voted for was to leave the EU because I didn't like it. So, and then I kind of followed the debate, and obviously it got quite exhausting for a lot of people. And from the financial market side of things, obviously everyone would pick on their own particular industry sector and have their arguments about how leaving the EU would be disastrous for A, B, and C industry. And for the finance industry, I think the scare story is, well, all the companies are just going to pick up and move to Frankfurt or move to Paris. Was that ever realistic, and has that actually panned out?
It was never realistic, and it certainly hasn't happened. In fact, the opposite. A couple of companies that did move staff to Paris have now moved them back. The city runs on what we call Anglo-Saxon capitalism. In fact, Angela Merkel invented that phrase, and she was very disparaging of Anglo-Saxon capitalism and decided that we were the cause of all bad things. And because of that, the German system has always been very different. Rather than have a very dynamic stock market, the DAX 30 index, which was introduced when I first came here in the 80s, or actually early 90s, I think it was, before they did that, it's hardly changed in all of that time. In sort of 35 years, you've got almost all the same stocks are there. Companies in Europe, and especially Germany, tend to go to their local bank and borrow money rather than decide to float their shares on the stock market. They don't really do that. In fact, I did once. I was in Germany trying to sell the whole concept of derivatives to a German who couldn't get his head around it. He was saying to me, people would only sell the shares in their company if the company wasn't doing very well. If your company's doing really well, your local bank will lend you money and you don't need to sell shares. And that was their kind of attitude. And so they distrusted everything that was happening in London, which is why when banks moved there, the attitude of the local people hadn't changed. And they disliked us even more, So it didn't surprise me that no one moved there. The only one that really gets it is Amsterdam, and the EU did cleverly choose Amsterdam as the place to set up their own trading business. So quite a few traders moved to Amsterdam, but it wasn't a big deal.
Yeah, so I think it speaks to culture, which can maybe missing from a lot of economic models and economic theories, is the kind of the people that sit underneath those economies, really, and people act differently. I think we spoke briefly on the last podcast about the School of Behavioural Economics, but I think there is some merit in that even regions and cultures and people react differently to different economic circumstances, whether it's your attitude to risk or whether it's other cultural factors that play into how you receive or perceive money or trading. I think that can obviously extrapolates to a wider economy, and it's a perfect example of, like you said, how in Germany they don't necessarily view the selling of shares in one's own company as a right way to do things. I mean, I speak to a friend who's in kind of the fast food business, and he was saying that in Germany the concept of drive-through restaurants does not work because people view their cars as sacred and sacrosanct. Therefore, eating in your car is verbose, and you would never do that. So therefore, drive-through restaurants don't work in Germany, which is like, oh, okay, actually kind of makes sense once you begin to think about it. But it's these small cultural details that you have to kind of factor into various layers of economic thought, I think. So it goes back to
dealing with sort of shares. In Germany, they could have different voting rights on shares, and the UK has always had this sort of fairness that one share gives you one vote. There's sort of like one man, one vote, one share, one vote. And that they're just thinking about changing to try and attract entrepreneurs who will go to America where they can also have different classes of shares. Whereas in Germany, they've had that for a long time. So things, and also local municipal councils invest in local companies. So something like Volkswagen, you'll find, or I think it's Audi or Volkswagen, one of the big car companies, the family that started it owns still about a third of the shares, which has voting rights over about 2/3 of the shares. But the rest, the other, another sort of 20% is owned by the local municipality, who also has a greater voting right than their shares. So that if you're an outside shareholder, you can lose out if the management isn't very good, because there's nothing you can do about it. If the family and the local mayor likes them, they're staying. But at the same time, it also means that companies can't get up and move their business to China so easily, or, it ties them into the local area. So there's swings and roundabouts around it. But it is interesting when you look at different attitudes to corporate regulation and share ownership.
I was going to say, you kind of said the point for me that was in my head. It kind of screams to a little bit of protectionism, which may be a good thing for the companies where they're founded in their own locales. But then conversely, it kind of says, well, you're limiting your growth potential as well on the other side of that coin if you're so closed, or you take a more.
Well, it limits their growth potential, but it also protects their management. The reason I looked into this was when the Volkswagen, scandal happened, and people realized they were fudging their figures on their
The diesel emissions,
the exhaust emissions in their diesel cars. They'd actually found it easier to change the calculation, or make the calculation change itself when it was doing a test, rather than actually fix the car engine. And no one in management was fired for that, because they had the protection of this strange voting system. And so because the family ownership and the local mayor was supporting them, they're all fine. Whereas if that had been a UK listed company, they would have all been out on their, shoved out the door the moment the scandal hit. But that didn't happen in Germany. So it's just different attitudes to things. So you're right, it does protect the company and keep it in the country, but it can also protect the management when the management probably should have been fired.
So in your time on the commission and doing the various trade deals that you did, what was surprising about working in government commissions and kind of drawing up policy? Did you face much resistance to kind of, I think, just guessing that your own bias is towards free markets and more free trade? Was that the attitude of the government at the time? Because it was a Conservative government that was initially leading those negotiations.
The biggest problem was probably the media. We were lucky because the Trade Commission, or the Trade Department, was a brand new department, and a lot of the people working in it were quite young, and they were really interested in learning about trade, and it was quite a positive attitude as well with the Conservative government was encouraging that. But the biggest problem we had was with Guardian headlines, which used to put up things that were totally false, but they are very good at getting buy-in from the general public. So I found most of the time while I was on the commission, I was researching farming standards in Australia and New Zealand and around the UK, because a lot of these headlines don't seem to understand that the UK's agricultural rules are devolved. And so things that are maybe against the law in England are okay in Northern Ireland or maybe Scotland, so that while the outrage from South Kensington or whoever would be writing letters to the Guardian complaining about various things, you'd have to say to them, well, we can't block this in a trade deal because it's legal in Scotland, or, they still do this in Wales, or, so it was a fascinating time to look at all of the things they were complaining about, especially things that they perceived to be happening in Australia, mainly because they didn't understand that farming is a business everywhere around the world, except maybe the UK, where this was at the time very heavily subsidized. And when farming is your business, you do not spend any longer transporting animals than you absolutely have to. When your country's business, one of its big exports, is farming agricultural products, which are unsubsidized, you put ports, lots of ports and lots of abattoirs. The UK used to have thousands of abattoirs, and it's down to 100, maybe 200, so that animals are traveling quite long distances here that they're not traveling in Australia, even though the country is so much bigger, because the industry is so much bigger. And it was little things like that there was a strange expectation in the UK by the media, who was working, and the Daily Mail was as bad as the Guardian, and they would publish these outrageously wrong stories, often because they were looking at other countries through UK eyes and assuming the same thing was happening there was happening here. The debates, I won't go into it, but some of the debates were just crazy. And a lot of the time, what they thought was so outrageous because it was happening in New Zealand was also happening in Northern Ireland. And they hadn't noticed, because that's not their problem, It's
So from your time in the Commission, did you achieve what you wanted to, or did you make your arguments as well as you wanted to, whether they were actually adopted or not?
Well, on the Commission, we were just scrutinising the already negotiated trade deals. But that was the biggest frustration, that these trade deals had been negotiated, and then we had to scrutinise them to make sure that they were legal and that they didn't break any of UK laws. And so we were really reporting to the Ministry, the Minister of Trade, and making sure that what had been agreed was going to be okay. The big frustration would have been much better to be a negotiator. A trade negotiator would have been a lot more fun. You could have got a lot more done. There was a sort of hesitancy. I suppose the first trade deals done after Brexit, there were people, they didn't want to upset anyone, when they really should have been much bolder and said, no, this is a huge opportunity for the country as a whole. And yes, one or two people are going to miss out, but in general, for everyone, and that's the big picture, we'll all be better off. So they should have been a bit bolder with their trade agreements, but they still got, I was there for the Australia deal, the New Zealand deal, and the CPTPP, which could be absolutely massive for the UK. But the UK has this really strange idea that it is actually Kansas. Something. It thinks it's somewhere else. It's kind of amazing. We import 1/3, in fact, slightly more than 1/3 of all the food we eat in the UK. We're massive importers of food because it's a relatively small country with not great weather, not a lot of farming land, and a large population. And not just the people who live here permanently, but we have about 1 million visitors in the UK on any day of the week. Amazing number of people that aren't counted in any statistics. But the visa, if you can find out the tourist visas, they do publish how many they let in. And when you consider that a lot of countries, such as Commonwealth countries, don't need a tourist visa to come in. So there's at least 1 million tourists here on any day of the week. So we're feeding a lot of people, and we're importing food to do that. And yet on all 3 trade agreements, there are restrictions on food imports. And yet there are no restrictions protecting any of our industries. And it's quite extraordinary that the UK has it in their brain that we are a farming nation and we have to protect our farmers. But we completely ignore protecting our car makers and protecting our plane part makers and protecting our chemical industry, our pharmaceutical industry. All of those industries are left to their own, sink or swim stuff. And weirdly, they are all the industries that make money for the UK. The ones that have had the least government protection and interference are the ones that are doing well. And the industries that have had the most protection seem to have never really thrived. And, I'm sure it's, protection doesn't actually help in the way people imagine it will.
No, certainly not. Obviously, I think I'm like yourself. I'm probably a fan of free markets a lot more than any kind of protectionism. But I know we kind of spoke about the Germany model a little bit, and there are some benefits to protectionism. Because I think the biggest use case or example of that recently is kind of Donald Trump's US protectionist policies and his tariffs on kind of all imports. Yes, probably imports for the US economy. How do you view that as a strategy for the US economy? In your understanding, would that be beneficial in the long term or in the short to medium long term for the US economy? Or is that, are they cutting their nose off to spite their face?
No, actually, I've talked about this a lot. And I think the confusion is I don't think that Donald Trump's tariffs are a trade policy. I think they're a defense policy. And people haven't kind of cottoned on to that. I think he's woken up to the fact that so many things that are essential to the US life, not just industry, not just the defense industry, but actually everything was being made in China. And we had the same problem during COVID. And our politicians haven't woken up to it in quite the same way. Having relied so heavily on one supplier, our car exports dropped very heavily after COVID in the year 2021 when they should have been booming again because they couldn't get very small computer chips that were made in China because China continued to lock down its factories for another year. So they were locked down for most of 2022 when we were open again, but we discovered that there was a couple of parts that we were missing because we relied on one factory in China that was closed. This also happened with the active ingredients in pharmaceuticals. So even though we were making the goods, the packaging and the capsules were being made in the UK, without that active ingredient, they didn't work. And often the reason the active ingredient was made in China is because it's quite cheap now. It's off patent. There's no benefit to making it here. So, and that also happens a lot of get made in India, but India continued to supply us. So we didn't have that problem. But when China stopped supplying various computer chips and various active ingredients, people in the US suddenly woke up and went, hang on a minute. And that is also the case with a lot of steel and aluminium that the US used to make. When I started trading, the Dow, which has always been the 30 biggest stocks in America, was all, steel makers, aluminium makers. It was very heavily industry based. There were no banks in it. There were certainly no tech firms. I think maybe IBM might have been in it, one computer firm, but other than that, it was very much industrial. Now it's virtually all banks and tech companies. So it's the exact opposite. I think suddenly the government realized that you're not going to be making armaments to attack China, where even now, something like 35% of the US's best latest warplanes, I can't remember what the name are, F-35 or something, is made in China. It's like, well, I suppose it could be a benefit as in it will stop at least half of a war, but unfortunately that would have to be true in the other direction. Yeah. So if 35 of Chinese armaments were made in the US, then the two countries could never fight each other. But unfortunately, that isn't the case. It is only the US that relies heavily on China for various things. So I think that was behind them trying to bring industry back to the US. And it isn't just a Trump thing. It actually started under Trump's first administration, but became much more serious under Biden. And people, the media in the UK are so anti-Trump. They all suffer from a Trump derangement syndrome. So when Biden doubled the tariffs that Trump had put on China in his first term, Biden doubled them. And yet I don't know anyone in the UK who knows that. You sort of go, it didn't make the BBC did not write a word about it. They couldn't, nothing Biden did was wrong in the BBC's eyes. And you're sitting there going, so when Trump puts massive tariffs on, you're all upset. But when Biden doubles them, you don't even notice. It was just this sort of insanity that people have. So it's not new, because the whole Biden's, what did he call it? Wasn't the Industrial Protection Act. It was something different from that.
Build Back Better plan, wasn't it? I think something like
that. But it was basically, that was the idea. And it was to bring chip manufacturers back into the UK. US,
Chips
rather.
Act, yes.
It was a Chips Act. He did that one as well. But so that he did it, and no one complained when he did it. And Trump is doing it in a more bombastic fashion, I will admit that. And now everyone's worried about it, but you're going, no, actually, this has been going on for a long time. And I think it's important that they do that. And I think it's important that we start thinking about that as well.
So just turning to kind of domestic policy. I know you've written a lot about the UK energy sector at the moment, and kind of Ed Miliband's plans or lack thereof, and how are we stifling ourselves and restricting ourselves in the UK by trying to implement an energy policy, or a lack of an energy policy that doesn't benefit the UK economy, or will it benefit the UK economy?
100% yes, we are stifling ourselves. We put a lot of taxes on carbon emissions back in the early part of this century, this millennium, in fact, and it started under Ed Miliband when he was there in Brown's administration, but the Cameron-Clegg coalition continued it. So we had higher taxes on our emissions than most other European countries, which is why so many of our industrial companies are struggling and ended up going out of business or moving their operations into the EU, because the EU had cheaper energy. And that includes even car manufacturers have moved into the EU. So we've got, JLR's got places in Czech Republic, Slovakia, and they're still using coal power. They're still using coal electricity. So we stifled that sort of industry. And I think that the governments thought we'd all become sort of city traders and tax accountants and goodness knows what, some sort of service industry. But those services are very much geared around the southeast, when it is so areas where there were big industries have found themselves with very little employment left, and no accounting firm is setting up operations there and employing people that used to work in a factory or a refining centre. But you've also got the situation where now that we're moving into areas where the UK could be really good in sort of AI and data centres and developing robotics. And these are things that come naturally to the UK. They seem to be very good at inventing things, but they all run on energy. And we've made our electricity far more expensive than anyone else. Our industrial electricity is the most expensive in the world. We have pretty much wiping out our plastics industry, and a lot of robotics does rely on lightweight materials, relies on carbon fibre, aluminium, various plastics. And that used to be a UK industry. That was a big thing we did here. We don't do it anymore because our energy costs are too high. So everything boils down to energy. And it's kind of incredible that our politicians didn't notice that. They didn't seem to understand that even a bank cannot afford to have a blackout for even a second. No trading room in London will survive with a blackout. It'll be boom. The thought of it is so horrendous. When I worked in the city back in the 90s, it was back in the days when the IRA used to blow buildings up, way before you were born. They blew up at least 3 buildings in the financial service area because my office was near 2 of them. And every bank had a backup dealing room. They actually paid to set up a dealing room somewhere outside of London where we were all knew that one day we might get a call saying, this morning you do not go to the office, you go to this address in Surrey where you will be trading until we can fix the office. And you think that's how essential everyone knew it was, that if they unfortunately got either hit directly by a bomb blast, but often you just had to be the building next door and all your windows were blown out and you couldn't trade there. So people couldn't afford to have a day off, it just was not going to happen. The idea of a blackout is terrifying. I go down to South Africa regularly about once a year in March. And for the last 8 years, they've had load shedding because they didn't have enough power to go around. And so every part of the city, domestic and industrial users, would be told which days of the week their electricity would be turned off for about 4 hours. And this has been going on for about 8 years. The first time it hasn't happened in 8 years was this March when I was down there. But pretty much every business during that time got themselves a diesel generator. And I predict this is going to happen in the UK. If they don't already have one, every bank is going to start putting in diesel generators so that when we do have the blackouts that people like Catherine Porter keep predicting is going to happen, they'll just be able to turn on the diesel generator. And that's completely negates the fact that we have these high energy prices because we've put all the carbon taxes on. So that when all of the wind and the solar cuts out and we have a blackout, we're going to then turn on the diesel generator, which generates carbon dioxide. It's a completely false economy. It's like you're not even going to be saving CO2 emissions when you do that. It's nuts. The more I look at our energy policy, the more crazy I think it is.
So what's driving that energy policy there? Because it seems to be ubiquitous for all the governments that we've had, even differing parties that we might have had, either the coalitions of the Conservatives, Lib Dems, Conservatives on their own, or now Labour. The energy policy hasn't changed. It's even gotten worse with kind of net zero, and everyone keeps committing to net zero. I think now they might have pushed the target date back from 2030 up to 2050, but the direction of travel has been consistent throughout all the governments that we've had in the UK, and it seems to be a serious handbrake that we've got on the UK economy, whether we need to pivot to something, a different type of industry, because obviously we've got AI now. AI, like you said, needs lots of data centers need power. But if that's our most costliest item, then we've got no hope of actually developing any capability ourselves, have we?
No, that's absolutely, you've got it in one. And I think you've brought us on to another topic, which is, the whole Westminster system relies on the opposition arguing the point with the government. You need a really good opposition if you want to get good government. And unfortunately, for the last 25 years, our opposition has pretty much agreed with the government. So they didn't push back on COVID lockdowns. They didn't push back on the whole net zero agenda. They've never pushed back on a whole lot of things that are holding us back. And it's like, well, you really need someone to take it apart and go, well, why are we committing to this Paris Agreement? What are we getting out of it? What's in it for us? Why would we do this to our industry? What other countries are going to do this? Why is Paris and why is it okay that China and India did not agree to do this? And why are we doing it if they're not doing it? It intrigues me how there's no review of what net zero means. There's no review of how they account for it. The biggest accounting problem in net zero is that we don't count imports. So if we import gas from Norway, that's not our problem, that's their problem. Whereas if we use our own gas, that's our problem. If we import a very carbon-intensive product from China, those emissions are China's, not ours. If we made it here in the UK, it would be ours. So we've pretended to lower our emissions, and we've done three things, and only three things. First, we converted our gas-fired power to electricity. We converted our coal-fired power to gas, and that cut the emissions by about a half. Then we got control of our landfill. Landfill gives off a lot of methane. We cut methane emissions by 70% just by controlling landfill. Nothing to do with getting rid of cows or anything like that. And the third thing we did was we deindustrialized and moved our factories to China and India and Vietnam and Bangladesh and Philippines and you name it. We moved our factories there. And then we gave ourselves a gold star saying, aren't we clever? We cut our emissions in half. It's complete rubbish. And no politician is looking at the accounting system going, hang on a minute, that isn't making any difference to global emissions. And this is meant to be a global problem. And emissions in China are not any different from emissions in London. It's very, very, very tragic. So
I think you need to upgrade your model, because don't you know the national borders go straight up through the stratosphere all the way up, Catherine? So yeah, our little bubble is fine. We are net zero in the UK. Yes. I could talk to you through. I've got dozens of other questions I could talk to you, but I'm very conscious of your time, so I'm just going to kind of fire a couple of quick rapid fire questions at you, if you don't mind. Okay, one economic myth you would permanently retire.
Oh, there are so many. It's probably the biggest one is that countries trade with their closest neighbour. They don't. They never did. They've never ever done that. In fact, generally they're fighting with their closest neighbour, and in many commodities, your closest neighbour has the same commodities you have. Therefore, you don't need to trade with them. And this has been the case right back through history. Since we've been able to get a boat and go somewhere else, we've been trading with countries that have different climates, have different commodities, have different resources or minerals, or, we've never, ever traded with the guy next door because he mainly had what we had. So, that's the myth that we have to get rid of. The weird thing is you can look at any trade statistics and it's really obvious. And yet there's so many people who are sure we trade with Europe because it's close. And you're going, no, we don't. We trade with Europe because they have things we want to buy. But if we can get the same things cheaper somewhere else, we go somewhere else. It's really not rocket science. It's every man running a corner shop anywhere in the country could explain this to politicians, but they don't understand it.
That's what we need to. We need more corner shop politicians, I think.
We do. No, I'm serious about that. We need people with experience in running a business. And it doesn't have to be a FTSE 100 business. Possibly better if it's smaller local businesses who have probably a much better idea of making payroll, cash flow analysis. They don't have the luxury that a very big company has of being able to borrow infinite amounts of money from a bank or whatever. So no, I'm really serious that we need to change the quality of our politicians and get people who run a business, any kind of business, from plumbers to hedge fund managers. They all have something to add to our government.
Couldn't agree more. Okay, and what's one policy that would transform the UK economy if it was implemented tomorrow, in your opinion?
Well, it's got to be getting rid of the windfall tax, which is technically the energy profits levy. It was a stupid idea to begin with. It's still a stupid idea, and we still have it. And it's makes no sense whatsoever. It's not even raising any money. It's a tax that is driving an industry out of business and not raising any money, even though it was implemented to raise money. It's not even a carbon tax. It wasn't trying to cut the carbon dioxide. It was just put on to raise money, and the OBR predicts it will raise virtually nothing in 2 years' time. You talk about stupid, and that was a conservative one. We can't blame that one on Ed Miliband. It was Rishi Sunak, I think. But anyway.
Yeah, well, I think there's plenty we can blame them all for. Okay, Catherine. Fascinating insights. I think I need to kind of listen back to this podcast a few times and learn a bit more about economics, but really insightful. If our audience wanted to follow you and learn a little bit more about some of the policy work that you do and some of your writings, where's the best place to follow you?
I have a Substack where I try and keep it short. They're not all short, but they cover a lot of different topics. But I work for the Great British Business Council. I'm the CEO there, and we've just put out our largest paper on energy, which you kindly mentioned, which is called deindustrialisation. Premeditated deindustrialisation, because I think the UK has done this. I should have a copy somewhere here, but here you are. Premeditated industrial destruction. It looks like that. And that is what we've done to ourselves. So all of these industries are based on oil and gas, and we're about to pull the oil and gas out from underneath them and then wonder why they collapse or move to China.
The Jenga bricks. Thank you very much, Catherine. We'll link to all that and your socials in the podcast description. But Catherine McBride, thank you for appearing on the DME podcast.
And my pleasure. Thank you very much.